We welcome you to our YouTube channel, SL Account School. Today's topic is accounting equation. Let's begin with a question. At the beginning of the year, business had an asset of 750,000 and liabilities of 240,000. During the year, asset increased by 120,000. At the end of the year, equity stood at 550,000. The difference represents 4 options are given for you to answer. Equation is a balance statement. Left side tallies with right side. Balanced, agreed. In this context, every transaction is an equation. Every account is an equation. The entire business is an equation. You can view the entirety of a business by looking at a balance sheet. Therefore, it is known as a photograph of the business. When we say it is a photograph, it is understood, it is relevant only for that split second when it was taken. After every transaction, the picture you show as a balance sheet will vary, but it will balance. It will remain the same. Balance sheet can be summarized into what business owns equal what business owes. In other words, assets equal liability plus equity. This is what is popularly known as accounting equation. Among students, they call it 3 O's. Owns equal owes plus owner. All equations can be presented in different formats, but the ultimate meaning will remain same. As you see, accounting equation can be assets equal liabilities plus equity, equity equal assets minus liability, liabilities equal assets minus equity. It is important to note with every transaction, the accounting equity will get affected and it will be changed, but it will be balanced. To make learning easy, we have categorized all transaction into 4 types. One, within the asset. One asset will increase, another asset will come down. Second one, within liabilities. That is, one liability will increase, another liability will come down. Third, between assets and liabilities. So, one asset may go up, same way a liability will go up. One asset may come down, liabilities will come down. Fourth one, profit or loss belongs to equity only. Always it is so. Just to test this, we will go through these exercises. First one, purchase of goods for cash. One asset goes up, other one comes down. Inventory goes up, cash comes down. Second one, cash received from debtors. One asset goes up, cash goes up, debtors, another asset comes down. Third one, cash paid to creditors. Cash comes down, asset comes down, creditors, liabilities comes down. Purchased furnitures, fixed assets, an asset goes up, cash, an asset comes down. Note carefully, fifth one is rent paid. An asset comes down, cash comes down. The next one is rent. It is an expenditure or loss. Profit and loss belongs to equity. Therefore, equity will come down by that amount. Stock of 10,000 sold for 12,000. Two things have taken place. Stock has come down by 10,000. Cash has gone up by 10,000 plus another 2,000. Why? The 2,000 is the profit. Profit belongs to the equity, therefore it will get added to equity. Seventh one is similar. An asset, stock comes down by 10,000. Another asset, debtors, goes up by 10,000 and a further 2,000. That being profit, profit belongs to equity, therefore this will get added to equity. Eighth one, interest received. cash and asset has gone up. The interest is an income, has gone up. Income belongs to equity only, therefore this will get added to equity. Ninth, discount received. We have paid a creditor of 25,000 in full settlement by 23,000. What has happened here is asset cash comes down by 23,000. A creditor, a liability also comes down by 23,000. A further 2,000, which is discount received and income. Income belongs to the equity, therefore it will get added to that. 10th one, depreciation provided. No cash involved, but an asset comes down by whatever the depreciated amount, and it is a loss. So loss belongs to equity. So asset comes down and the equity as well. These explain the movements between accounting equation. Next, just to know, there are other equations as well. Not only the accounting equation, here as you see, the trading account equation, profit and loss equation. There are many other equations. Whenever the situation comes, we will learn about it. Now let's go to the question. In this question, assets of 750,000 and liabilities of 240,000 are given, but no equity. But we can calculate it. Assets minus liabilities equal to equity. Therefore, 750 minus 240, 510 is the equity. Next, during the year, the assets have gone up by 120,000. It means equity plus liability should be 120,000 up. The next one, they give the equity at present is 550. At the beginning it was 510, we calculated it. So the difference is 40. Therefore, the balance increase of 80 has to be liabilities, which is B, and that is the answer. Hope it is clear. Now we will go to, we have given you a small flashcard. By looking at, try to recapitulate what we have learned today. Dear student, in conclusion, these lessons are provided to you by our YouTube channel, SL Account School. We kindly request you to subscribe, share, and propagate it among your friends and accounting students. Thank you very much.